Stop using only one strategy to trade all the market conditions. I know that sounds counterintuitive, controversial, but if you have been trading markets for a long time and still not making consistent profits, that might be the reason why. Most traders are stuck with this one idea. If I only master one setup, I will finally be a consistently profitable trader. Sounds logical, right? But the trading logic doesn't often meet the reality. And that belief is doing more danger than you think. Let me explain. We've all heard this quote. To get the consistent results in the trading, you have to be doing the same things over and over again. And I agree with that for 100%. But here's the problem. This is the most misunderstood quote in trading. Consistency doesn't mean doing the same exact thing every single day over and over again. That means consistently adapting to what the market is offering right now. And that right there, most traders just fall flat on their face. And here's the truth that no one told you about trading. There is not only single market condition. There are many types of the markets, and all of them don't behave the same. There are trendy markets, there are rangy markets, there are volatility sparks, and there's dead zones when the market is just literally ranging. Think about it for a second. If you are using a trend following strategy, what happens when the market gets stuck in a range? You will get chopped to pieces. And the worst part is that you will blame yourself, but when in fact, you're just using the wrong tool in the current market condition. And let me flip it for you. Let's say if you're using a liquidity grab strategy, just expecting some fakeouts and reversals. But the markets, on the other hand, is trending clear, giving a perfect pullbacks. And you keep fading it over and over again until your account starts begging you in a mercy. So you see what I mean, right? There is a holy grail that works in every single market conditions. So the biggest mistake that even a pro traders do is expecting one strategy to carry through all the phases of the markets. That's like bringing an umbrella to a snowstorm and wondering why you're freezing up. So here's the solution. You need multiple entry models that are designed to trade different types of the market behaviors. Just like the carpenter doesn't use the hammer for every single job, you should not trade the single strategy for every single setup for every single market conditions. Over the last 7 years, I've tested, failed, adjusted, refined it, and finally boiled it down to the 3 core entry models. These models are designed to handle every single market conditions, 3 models. And once I have added them to my trading strategy, to my trading plan, my results became almost boringly consistent. And trust me, in trading, boring is actually beautiful. So let me break it down for you. The number 1, an expansion model. Expansion model, in simple words, it's a breakout and retest setup. You'll use this after the long periods of the consolidation when the market is finally ready to move. So logically, the trend will never last forever, and logically, the range will never last forever as well. So basically, using this method, you will be able to catch an early trends when the move is fresh, clean, and filled with momentum. Imagine a market that's been asleep for days. Everyone is waiting and the price is cooling down tighter and tighter. Boom! And the breakout happens, and your expansion model puts you right in front of the move. This is not just a strategy, it's a way to put yourself ahead of the crowd. And in trading, the early bird doesn't just get the worm, it gets the whole feast. Number 2, the reversal model. In simple words, it's a simple supply and demand zones trading strategy. This model is built to ride the trends with precision, entering on the clean pullbacks. When you know how to really identify the turning points, the markets literally become the map with access, making a clear spot for you to enter. Most traders chase the trend and get in too late, entering on the hype and exiting on the pain. But with a reversal model, knowing where is the supply and demand is, you're not just guessing, you're entering exactly where the price wants to bounce. Pullbacks are the gifts, but only if you're ready to catch them. So this model teaches you how to stop chasing and start anticipating. Number 3, the liquidity grab model. Now we're getting surgical. This model is designed to trade the choppy markets, fakeouts, and traps. When the trend dies and price starts chopping and price starts hunting for liquidity, this is exact weapon that you have to choose. The rangy markets is where most of the traders bleed out slowly. But in fact, if you check the statistics, 70% of the time the price is ranging. Only 30% of the time the price is trending. Most of the traders miss it and say this is a trend, they jump in, then boom, the reversal. It's a fake out. Then it reverses again, boom, stopped out. But once you master how to spot the liquidity grabs and actually know in which conditions the markets are right now, in the trendy or in the rangy, you will literally be able to see through the noise and trade against the herd. This is exactly where you flip the game. You stop being the liquidity, you start taking it. Now you might be thinking, okay Islam, these models sounds great, but how do I actually trade them? How do I implement and just insert them into my trading plan? That's a good question, because knowing the theory is just one thing, but trading it, this is where most of the traders struggle. Because without the structured plan, even the best model is just another idea, which is just gathering dust in your trading journal. And that's why you need a trading plan, the real one, not just a bunch of screenshots and wishful thinking, but a written and structured plan which tells you when to use each model, why it fits the markets right now, and how to manage your risk. And the best part, you don't have to build it from scratch yourself. I've put together a full free lesson where I walk you through 3 models, how to use them, when to switch between them, and how to build your own hybrid strategy around them. This is literally the shortcut, not to avoid the work, but skip the confusion. And you can watch that trading right over here.